It's Vikas Khemani, and where he feels the Trump bottom is, and what are the spots where you should be investing in right now?
India is on a relative basis quite well placed, and that can give us comfort. And eventually, I think it will settle down in next couple of months. And once I think the dust settles, I'm sure India will definitely emerge a winner or a better player or better placed uh, than what it is today. So that's at least confidence I have. Now, as far the from bottom or how much it can correct more, nobody knows. But I would like to believe that market should bottom out in around 22,000 levels of Nifty. Which is where we are. I think give and take 300, 500 points. These days swings very often. So can't say that. But I think from a fundamental perspective, valuation perspective, it's a good range of 17, 18 times earning. India macro from all standpoint of view is very, very solid. There's no fault line, there's no major risk.
Prices will bottom out before events do. What is the right way of understanding that this is the price bottom? It may not be the news bottom.
So I think again that from a short-term perspective, nobody can say that market in short-term market can be very, very irrational. For one news, we saw how markets reacted, on a particular day, and I think India stood again very, firm within that construct. But markets can go. But another comfort one can take is that we are in a good growth environment as far as Indian equities are concerned, economy is concerned. And at 17, 18 times price to earning, Indian Nifty does not look at all expensive. It is very, very good proposition. And like we have discussed many times, nothing on the Indian story changes. Given this current tariff situation continues, India tariffs lowest being only stands out as an edge for India rather than a risk for India. So Indian producers will be far better placed in terms of exporting to US than anybody else. And if that's the case, then the worry should not be there. It should be seen more as a comfort. But whenever there's a fearful environment global level, it is rightfully that markets can be edgy. And that's the reason I believe that I don't see deep downside from here unless some, again, catastrophic event happens, globally. I mean, no, it's very hard. My sense is that we are in and around 500 point plus minus from here. We should be in this range. And as the earnings come out, as the issue settles down, we should resume our trajectory. My sense is that in this quarter, April, May, June quarter, all these things should settle down, and June onwards we should look good.
Because one side interest rates are likely to go down. India, they've already gone down. Globally also they will go down. Second side, there is fear of inflation because rates will go higher. What is the right way to look at it? Inflation coming back or interest rates going down and the impact of it?
So I think it's a very interesting question, Nikunj, you ask. I think in US, at least what I understand, that's how it's being planned. That there's a lot of cut in the expenditure which is happening through Doge, and tariff will probably give some tax collections. So net, I think President Trump probably trying to bring down the fiscal deficit, which will pave the way for aggressive interest rate cut, and which will eventually pave the way for investment cycle. This is the probably path President Trump is seeking. The problem with this path is that there is a lot more pain before it starts getting the gain, right? So this journey for US, in my opinion, will be painful. US could be facing an inflationary issue if they go ahead with this kind of tariffs, because it's very simple calculation. It's not a big deal you need. But so I'm sure that they will have to figure out whether how much inflation happens. Nobody knows. Again, like I said, if you don't know what the outcome, what the policy is going to be, how will you know the inflation output? But at the same time, as far as India is concerned, I think we are in a reasonably good environment. In fact, if the commodity prices remain soft, it helps India. I think India is not in a very mega inflationary environment. We are in a reasonably well managed inflation environment over the last many years, including during the Ukraine war time. So I think India is India has a lot of scope for further monetary policy action. Should the global environment turn difficult, India has sort of India has scope for monetary action. India has scope for fiscal action. So that's a good news. And that's when I keep saying again and again, should the global environment turn a little bit more difficult, I think India remains on a relative basis quite insulated.
Which are the stocks or themes you want to buy in this decline? Banking, everybody's talking about, but what else? I mean, when supply chains are disrupting so rapidly, a lot of changes will happen.
So, like, I think again, right now the way we are positioned, we are quite overweight on banking and financial services. We are overweight in pharma, CDMOs space. We have some consumer names in our portfolio. So again, we have industrials or capital goods play in our portfolio because we think the investment cycle continues to remain robust. So around that, most of our portfolio is right now positioned, and then it boils down to individual stock specific names, and we don't think there's any major challenge happening in specialty chemical did very well. We are seeing softening, but I think there also there's good opportunity coming around. So I do not, I mean, some of these names, which are segments, we told you we are quite overweight, and we keep looking at individual names and stories, and it boils down to again then the stock picking.
Is all the bad news in IT in the price? Because like a TCS is down 35%. But these are companies, Vikas, which still generate a lot of cash. They
Yeah.
still have solid ratios. So do you think there is extra pessimism in IT and this earnings season, which would be marred with confusion and perhaps no substance because IT companies also don't know what to share? Could this mark as a long-term bottom for them?
So I think IT probably is facing two challenges. One is especially large cap IT companies. One is obviously potential slowdown in the US growth, as is talked about. One does not know the potential, at least the perception of slowdown, and we will only know in time to come whether it is slowdown or not. And second one is the potential challenge in terms of what will happen on AI. And there are lots of theories. Some people believe that AI will be an opportunity for them. Some believe that AI will be a threat to them. So again, depending on which side. So broadly, markets kind of tend to don't rate stocks which have few uncertainty around very well. But having said that, like rightly you said that even the cash flows and all those things, 20 times in and around earning is a good valuation with a good dividend yield. These companies do sort of offer. So I think real opportunity, according to me, is in the mid and small IT cap space where